We're back again, the Soul Inspiring Business Podcast. And in 2025, the focus is really to bring you guests to inspire you to think differently about your wealth, your health, really help you optimize all facets of who you are and help you expand into that highest expression of you in the world. And today, I'm thrilled to introduce you to a man who has cracked the code on income generating wealth portfolios, Steve Selengut. Steve was a private portfolio investment manager with over $110 million in assets before selling his business in 2023. He's introduced several proprietary concepts, including the working capital model, the investor's creed, base income, and the investment grade value stock identification system. As a 44-year investment professional, he's developed a simple yet little known system for producing reliable market generated income. Now semi-retired himself, his real mission is to bring this system to as many investors and retirees as possible. So I'm really excited to learn more about this myself. I'm really excited to share this conversation with you today, and it all starts now. I'm Kara, and welcome to Soul Inspiring Business. I believe that all of us possess unique gifts and talents that allow us to serve the world and our own growth in the highest possible way. Our lives are an expression of our thoughts, beliefs, and actions. And here, we will explore businesses, thought leaders, and topics designed to inspire, helping propel your own growth so you can live your best and most purposeful life. Welcome to Soul Inspiring Business. Welcome back to the Soul Inspiring Business Podcast. You're in for a treat today. We are welcoming author of Retirement Money Secrets, a Financial Insider's Guide to Income Independence, Steve Selengut. So thank you, Steve, so much for being here.
My pleasure, Kara.
Yes. Well, we, for our listeners, so Steve and I actually met on a mastermind that we were a part of, connected, and we found all these kind of interesting parallels between, real estate and investment and how to run financial portfolios. And, one of, I think, the big things for the podcast this year is really bringing our listeners all sorts of interesting, fascinating guests to empower them to not only in their business, but their personal, to create wealth and abundance. And so I'm thrilled to welcome you to the show today because you've done things a little differently in the financial space. And I am excited to really dive into that. So can you share us a little bit about your background, how you got called to the work or the work got called to you? And
I guess it goes back to my background, which was actually in a real estate development family, or one man show, pretty much. My father, and he had a real estate development company in Northwest Jersey, a place called Lake Apacon, which was nobody knows there are lakes in New Jersey, so that probably raised a lot of eyebrows, but there are, and it was a resort destination for people in Manhattan to come out there, and he bought this piece of property on the lake, and he started developing mostly summer homes, but on pieces of property that were big enough to expand if they chose to. And it was an integrated, vertically integrated operation where he owned a lumberyard. He owned a local lumberyard with his attorney. He had an insurance guy in his operation that would take care of that aspect. He'd loan the money to the people to buy the houses. So he had that cash flow coming in, and he'd have rentals. So he had several streams of income, 3 or 4 streams of income coming in. So if something went wrong with one thing or the other, was nobody was buying homes, at least he had the rentals, and he had the insurance, and he had the interest and the principal payments from the loans. So
wow, I mean, just to take a step back and think through, because that was at what time period?
This was in the early 50s that he started developing this property, because we moved from New York out to Lake Apacon when I was 5. So
And to have, I think that's so interesting to have the, awareness and the business acuteness to think through diversification, really, he was kind of ahead of his time in many ways.
Well, he went to Columbia, so I guess the masters, of course, and we didn't find out about this until years, but and if you knew him, you would say no way, his master's was in philosophy. He is the most unphilosophical person you'd ever want to meet. But unlike myself, who, yeah, right.
Right.
but anyway, what he taught me basically was that, income pays the bills, man. I mean, you can have, he said, I don't go near the stock market. All it does goes up and down. It doesn't pay any money, and so even when I first started my practice, he was not on my list of prospective clients. He never invested a penny with me. Never. Really. So and I didn't really need it. But
Right.
anyway, that's my background. My background was knowing that income was an important entity, that it didn't really matter market value, how much our house was worth, how much your house was worth. Doesn't really matter unless you're planning on selling it. And you can't spend market value. You only can spend real money in your hand, and that takes income. So that was, just pushed on me my entire life. And as it happens, of course, as I mentioned to you, I went to a small school in the center of Pennsylvania. Not known for the college, but known for the battlefield that it's on, Gettysburg.
Yes.
And so my brother and my father went to Brown and Columbia. My brother just went to Brown, and here I am going to, at that time, this little dinky cheap school. So when I was 25, the sum of all the money he took from me, or had me invest with him as I was growing up, mowing lawns and stuff like that, plus the money I didn't spend on college, came to me in an envelope, a manila envelope, on my 25th birthday on the table, and he dumped out a pile of stock certificates. And you've never seen a stock certificate, right?
No.
In the old days, you actually had if you didn't have it, keep it with the brokerage firm, you got a certificate from the company, which just looks just like a title for a car. You could turn it over, sign it, and give it to somebody else, and here you go. Here's my Exxon stock. You own it now. Give me the money.
Interesting.
Yeah, and that's how it used to be. And if you took it from the broker, so they took it from the broker that it had been with, and they gave it to me, and said, "Here you go, kiddo. Now don't lose it," because it was a lot of money in those days.
Mm-hmm.
It was nearly six figures in 1970.
Oh wow!
So you can manage, and So my objective at that time was to, not lose it. So I was like, this broker and I, and she was a wonderful person. She was quite a bit older than I, and she kind of took me under her wing and coached me on how what the price movements were in the various securities. These are all dividend paying, what you call big board stocks and so on. And we studied the charts, and we looked at it, and I came up with the idea, well, this one just goes like this, and then up and down with an upward trend. What's to stop us from selling it when it hits a top? And then just keeping an eye on it and buying again later when it goes down a little bit, because they all do that. And so we wound up with maybe 200 different dividend paying stocks in those days that we traded in and out of.
Now, and just to stop you for a minute, because were you had your dad sort of helped you understand some of these concepts? Because I mean, you're 25. I'm just imagining like 25 years
25 years old, yeah.
And you drop this on your desk, and you're like, "What?"
Well, he had. I knew how he traded, and how he built, and how he collected rents, and how he flipped properties. I mean, there's, I do income portfolios. That's paying just like a monopoly board. But they're closed-end funds. They're funds of securities, and they're paying me rent.
Right.
Or they're my employees, however you want it, whatever analogy you want to use. The primary purpose, the initial purpose is the income that they produce for me. Then, as a special treat, every now and then they go up in price. And they say, you can sell me now. You can make a profit because I'm going to go down again. So get me now. It's just like that. So I did. And I kept doing it over and over with same companies. And then by the time I was 34 in 1979, I was making 5 times my salary in New York. And I said, why am I commuting to New York? Why am I putting on these stupid 3-piece suits and just looking like the other automatons walking up 8th Avenue to get to work, every morning? It's crazy. When I'm making more money here, I can do this for other people.
Okay. It was sort of an epiphany that at that point, wow.
Epiphany number one. Yeah. I don't have to slog into Manhattan every day. I can work. And of course I had needs. My father had an office, so I got a little office in his building, and I just took off with this business and grew it. And no one else was directing traffic like I was. Everybody was chasing market values. What's next? What's hot? Your brokers would be calling people in those days and say, I got a hot tip for you. They could say stuff like that in those days. They can't today. And I was saying, no. I've got a portfolio here and it's generating 7, 8, 9%, whatever it is, happened to be at that time. And this is what you want. This is what you need, because like me, you're going to sometimes say you don't want to run that gas station anymore.
Yeah.
You want to do something else, or your kid needs an education. You need income, man. So that's what started it. And income was always what I was focused on.
Well, and you're so right. Even, and we see it all the time, we mention it, but like in real estate where people are like, oh, what's my house worth? Well, what are you planning on selling? Because like, if you're not planning on selling, it doesn't matter what it's worth today, because you can monitor it, but 6 months from now, hey, 2 weeks or 3 weeks from now, it could be worth something different. Right. Depending on what's going on in the market. So it's interesting go ahead. Sorry, I interrupted.
I was just going to say, and that's another similarity between investing in income-focused securities and investing in real estate, because the key element that affects prices is interest rate expectations.
Yeah, that's so true. And go ahead.
And we both can take advantage of it, because if we know if interest rates start to go down and prices go up, then we start leaning on people and we do some selling and things like that. And interest rates start to go back up and prices fall. Well, then in my case, we have the income coming in that we can buy new things and take advantage of the lower prices. And just like you would be able to with rents and things like that. I don't know if you've gotten to the point where you're playing banker like my dad did, but you have the money to go out. Oh, now I got an opportunity to buy this land cheaper, or this house, I can buy it. It's for sale. So it's the same main force that impacts both our operations is the interest rate cycle.
Interest rate cycle. Exactly.
Yeah.
Well, and I think I think that for many people, there's this dream of creating passive income streams or, different income streams, so that you're not solely reliant on, your occupation. So you've got these other, possibilities of income coming in, so that if something happens, like you're not crushed. But I think while I think that's a lofty goal for a lot of people, there's also this idea of, well, how do I get started? What does this even look like? And then they don't really know what to do. So then they don't get started at all. And then it becomes like next year's New Year's goal, New
Yeah,
Year's resolution, right?
right, exactly.
Beginning of 2025 right now. So, everybody's got all these goals and then, you don't do it or whatever. So let's talk about what does actually this look like? How are you structuring this for people, so they can kind of wrap their head around it a little bit? Or what would be an introductory course to some of what you're doing?
Well, I think as you indicate, the problem with this is financial education at the high school and the college level, unless you're a major, is nil. I mean, it's just not there.
Mhm.
And even if you're a professional and you come out as a doctor or lawyer or whatever, you didn't get any financial training. You have no clue what to do with your money, other than to get that fancy car and make sure you're driving the right thing and you're
Yeah.
dressing nice,
Right.
But
And I should add that, I'm a finance major, so I know a lot of these things, but even still, sometimes putting it into practice or, of course, then I went into real estate sales and I'm like, forgot some of the stuff we knew. Or we're taught from the time we're little that we have to invest in the stock market in your 401k, and that's the only way. So,
right, you don't know anything else
no.
today. We didn't. We had. I had a savings and investment plan, is what they call it, at the insurance company that I worked for. But there were no IRAs then, or even that. I mean, do you know what we started? The IRAs were started. How much money was you were allowed to put in a year?
No.
$1,500.
Oh, really?
That was the initial amount. Yeah. So many people
Wow.
didn't even bother.
Right.
But anyway, I guess where we were was what? Well, where do you start with people like that who even a person like yourself who really probably didn't take specific courses in the stock market or whether you want to invest here and there and all these different things. I when you talk to people, I talk to people, newbies. I talk about the income focus, and I say, the stock market is a wonderful, wonderful thing. That's really how I got to where I am. But I use it differently now than I used to use it.
Mhm.
I use it more as part of my portfolio that I want to ride those waves and I want to take advantage of that market cycle. And the way I do it is with a type of security called a closed-end fund, which is really a trust vehicle. And I'm sure you come in contact with trusts a lot.
Yeah.
And the nature of a trust is that its function is, in my case, its function is to make money, but in order not to pay taxes itself, it passes 95% of that income through to its shareholders, which would be a nice thing that stocks could do, but they don't. And consequently, they can't be really growth vehicles, but they're
Mm.
very stable as income vehicles because that's their purpose, just like. So what I advise younger people or people who just now are getting into retirement and they've converted their 401k to an IRA, which by the way everybody should do. Don't leave it with the 401k company because you'll never understand your money if you do that. And I show them that there are these tools, these closed-end funds that contain all the other securities, like any stock you can imagine that you really feel, oh man, I need to find something like NVIDIA. Why didn't I have Microsoft or Amazon, and why shouldn't I have them now? There's a good reason. But what if I could contain all those in a fund that contains about 250 positions? So it's, incredibly well diversified. Diversification is an important concept in real estate, just like it is in the stock market, even more so in the stock market, because stocks are a lot riskier than real estate is.
Mhm.
But what if I could do that and have something and it's paying me 9% income? Right now, they're paying, the equity ones are paying over 10%
Mm.
today.
Wow.
And that's what I say to people. You can you can you can be investing, you can get excited about the stock market, but you can do it within a shell that's not as risky. It's not going to, and its financial risk is almost nil compared to a stock, and it pays you a large sum of money for the privilege, and you keep getting this money and you reinvest it, and we all know at 10%, 7.5 years, you double your money, and that's without taking any profits in the way. But there are vehicles like that contain all the different fixed income securities, the bonds, the mortgages, the real estate, the
Mm-hmm.
liens, the loans, the this and that, preferred stocks, as well as equity. So you literally can control in a few entities with an average price of less than $25. You can own 100 shares of these multifaceted funds that pay out huge sums of money.
Hmm.
They're different from mutual funds. They're different from ETFs.
Interesting.
In the fact that they're trust vehicles, that their focus is income and not growth and market value, and that they're so different. They're different from stocks, but the security that you actually own when you have ownership of this trust trades like a common stock, and it operates just like in the stock market. The popular stocks sell really at multiple premiums to their net worth, or their book value,
Mm-hmm. Yeah.
right? And nobody gets excited about that. Nobody bothers with that, and they never ever really trade at book value. Closed-end funds don't trade at book value either. Their prices are a function of demand, supply and demand, and they're not as there's not as many shares. They don't mutual funds manufacture shares. If you want shares, they just issue them. Same
Hmm.
with ETFs. There's no
Right.
there's no fixed amount of shares. With closed-end funds, it is a fixed amount. It's
And
just
so
like
are
a
you
stock.
actually putting this fund together? Or how
No,
have you kind of
these
been introduced to some of
I
these?
I put together when I was managing money myself for other people.
Yeah,
I would put together portfolios that contained these funds.
got it.
But the funds are put together by people like Nuveen, BlackRock, you name it. I mean, there got to be 50 different companies out there that do provide these types of investments. They're totally, almost totally unknown.
Yeah, because
And
it's funny. I think most people listening are probably like, huh, never really knew about this type of thing, or where do I even learn more about them, you know?
yeah, there's a reason. There's a good reason for that.
Hmm.
And I mentioned it. I alluded to it. They're not built for speed. I mean, if you were running a business, even if you were running a pizza place, you know, if you had to give 95% of your earnings away to somebody else, it's going to be a long time before you can add another pizza place to your business model, you know. So,
Right.
and most in the stock market, the companies, as they're growing up, as they're becoming big, they're not giving anything back to their shareholders. They're expanding their business because that's what it's all about with them. So
Hmm.
this is a whole different type of entity, and it's one that, yeah, you want it to be profitable, you want it to make a lot of money, but you can't expect it. You're not going to get it to take that money and reinvest in anything because they got to give 95% back to you. So you have to change your mindset. You have to focus on the income.
Mm.
And then you become more like my dad, and you focus on the income. How can I make more income with this type of security? Well, I know if I buy it, it's going to pay me in the 10% neighborhood. And and that's today because interest rates have risen significantly from where they were 2 or 3 years ago. They were nearly zero.
Mm.
So now they're at 10. Then they were around 7 or 8%. Okay.
Got
So
it.
now they're about 10%. So You know you can do that. So then you say, okay, I know I'm going to get this amount of money. So what other streams of income can I find? Well, the next one is, because interest rates rise up and down and the stock market goes up and down, these prices are going to go up and down by supply and demand. Imagine if everybody who listens to this radio were to rate this program were to go out and throw all their money at these types of securities, they go up in price. You know, so they're just like stocks.
Yeah.
So the opportunity comes around for stream of income number 2, and that's profits that you can make by selling them, just like in the stock market. So, for example, this past year in 2024, I had my distribution income from my portfolios, and in addition to that, by taking profits, I made another 7 months worth of income. In other words, the amount of income I would have made in 7 months, I equaled that with the amount of profits I was able to take in the market.
Wow.
So that's more than 50%.
Yeah.
Right? A little
Absolutely.
bit more than 50%. So it's like having a salary and getting a nice bonus.
Yeah.
And we also don't worry about the taxes either, because if your employer gives you a bonus, you don't say no thank you, because you'd have to pay taxes on it, do you?
No. You say thank you.
That's right. Thank you very much.
Money.
So, but that's what these funds are like. It's you change your focus from just wanting it to go up. And the problem is, when you focus on just the market value going up, you tend not to sell. You start to fall in love with your properties. You fall in love with your stocks, and you know they're just going to go on and on, up and up forever and ever. And then all of a sudden, you're like a couple of my fraternity brothers who in 2008 were just about to pull the trigger on retirement, and all of a sudden their 401ks were now half the price they used to be. And they said, I got to work another year or two.
Right.
And you don't want that. If you have a portfolio that's focused on income, any downturns in the market become opportunities. If you got the quality and, your quality diversification, all those other things going on.
Now, would you say that this type of strategy is geared more for somebody that's retiring, or do you think it's at any point this is really, because I know it's retirement money secrets, but some of this I think could you implement from early on, right?
I did.
Yeah.
I mean, that's the way I always ran my portfolio, even when I was 25 and under. I always focused as much on the income, and I always took my profits. And I took my profits. Do you want to hear the story? Why I became a profit taker?
Yes.
Well, when I was getting started, I worked, like I said, in New York for this insurance company, and I was in their pension investment department. And they had hundreds of clients throughout the country that had plans like we had, these employee benefit plans. And we were changing. This is at the beginning pretty much of the computer age, and we were changing to a computerized. In fact, they call it computerized some. I forgot the name of this. CAPS.
Okay.
So that's what it was called. Anyway, so I was going out, and my job was to sell the managers, not the companies, to let our managers change them from this system to the new CAP system. And when we were flying out there, and I had, this is after I'd gotten all that money, and I was in this pension investment department. So naturally, I was looking at the portfolio and using it to select securities with Rita and all this stuff. And I was talking to the manager of the portfolio on the plane, and I said, "Excuse me, you've got a gazillion shares of Boeing, and it's almost 50% profit. Why don't you sell it? Why don't you move it around and add more positions or add some income securities?" And he told me a story. He said, the reason that we here uh, keep so much of our money, of your money in Boeing, is because Boeing is one of our biggest insurance clients. And they like it that we have a lot of their stock. So this giant light bulb, they almost threw us off the plane. The
Wow.
giant light bulb. Whoa, wait a minute. I thought we were dealing with economics. We're dealing with politics. And
Mm.
how many other companies have the same arrangement with you? How about Coors Brewery? They have that arrangement to you too. Do you have a lot of? And I look and there's a lot of Coors stock, and then you know what I mean.
Yes.
And then how many insurance companies are there?
Wow.
And it just went on, and I said, never ever again. If I've got 10% profit, I am out of there. I may go back in again, but I'm taking that profit because who knows if Boeing fires them as their insurance company, they're going to get rid of at least half of that stock anyway. And
Right.
it could hold, so that's how it all started. That I got this thing that I have to take the profits, and I always will.
Interesting. Yeah.
Yeah,
It's
that's
so
how it started.
fascinating because sometimes you think there's a bigger reason. There's like all this analysis, and in this case, nope,
Nope,
just a
it's
relationship. Like they
there.
wanted,
You go,
you know.
and think about it. I mean, you can tell, you can see how that's true. I mean, there's
Yeah.
a lot of that stuff,
Yeah.
especially when you get
Absolutely.
up in the big numbers area.
Absolutely. So if you were, I know that you're right now really passionate. And it's funny. I was on a call with a friend of mine, and we were talking about building community and how important I think that is now, just to create more relationships, especially as we're learning and growing, to connect with more and more people so that we can really expand that growth. And so I know you're really passionate about creating community as well and helping people really start to implement some of these strategies. So can you tell us a little bit about the investor community that you're building and um,
Yeah,
the, the purpose there? Yeah.
it's interesting. I've been working with you in these groups and stuff like that, but
Hmm.
you you get so much garbage mail, and people join. They become a member, and then they post these ridiculous things, and and it was like teaching a grade school, and you slap slap. You just back in
Right.
the day when you could do discipline. It was
Right.
really a pain in the neck. So this one of actually the ghostwriter on the Retirement Money Secrets book has started a community to teach people how to start communities.
Oh,
Interestingly, and
interesting.
she told me that she thought that my program would be perfect for a community because it's something that everybody really needs,
Yeah.
and that I had so much content because of the articles. Hundreds of different articles and things I've done, and Q&As and podcasts and all this other stuff. So I said, okay, we'll try that, and that's what we started to do. So we set up a community called the RMS Income Investing Community, and it's on School. That's the name of the platform.
Oh, yeah. Hmm.
So it is going to be a school. I mean, we're planning like a college level income investing course, and we're doing it in the form of Q&As on various topics. Like on the 28th, we have one on the fundamentals of closed-end fund investing. Is going to be the topic of the Q&A. Now I'm going to talk about 6 or 7 different things that from the conversations I found that people need a little more fine tuning, and I listed those, and they come and they bring any additional questions they have to it, and we can go on for hours. The last one was 2 hours long
Mm.
that we had, and that was about using some of the tools. There's selection universes and how to use them, and this one website called CEF Connect, how to use it to develop a list of securities you want to look into and stuff like that.
Oh, interesting.
So,
Well, I just actually I'm in school now with a different community, so I love that.
oh,
And for our listeners, it's RMS, which is Retirement Money Secrets, to give you a quick little alliteration there. RMS, Income Investor Community on school, and that's school
Investing.
SK.
Yeah.
What's that?
Income investing.
Oh, Income Investing Community. So
Community. Yeah.
RMS, Income Investing Community. We'll drop it in the show notes. And the platform is School, which is SKOOL. So, but I love that because I think that, you know, the idea of having this podcast with you today too is for people to just get a general idea of what is this, and an introduction
Yeah.
into this idea that you can really create income, create, you know, more income streams through this type of investing. And I love being able to bring people like yourself that are just really passionate about helping people. I love givers, and I know that's you. You know, you've learned so much, and so now you're like, how can I share this with people so that other people can do it too?
Yeah.
And just really appreciate what you shared. I'm curious with so in the community, or do you manage? I should ask first. Do you manage other people's money,
Not
or really
anymore.
just educating them
I'm
as to how
just
to do it?
educating now. I run my own portfolios, but I sold my business back in May of 2023.
Mm-hmm.
So I don't manage other people's money anymore.
Got it. Yeah.
So I just teach. It was, you know, I'm pretty old, you know, so
No, you're not.
I'm not. Well, you know, there's a
In this next
I'm
career.
just getting started in this career, but there is, you know, you can, when you get to be almost 80, you see, you know, there is mortality starts to become a thought.
Mm-hmm.
And my thinking is that so many people could benefit from this type of investing, just to change and to focus on the income. And I'm trying to get it out there for people to find out about. And that's, if I can, you know, I don't expect to touch that many people, but even a couple thousand is better than none.
Yeah.
You know what I mean?
Well, you know, again, I was, you know, talking to somebody the other day, and we were talking about, you know, the idea that, and my listeners have heard me talk about this, that, you know, I believe that part of our responsibility, our job as a human, is to figure out what our unique gifts are, what is that unique contribution that we have, and to figure out how to share that with the world in whatever way that is. You know, for some people, it can be getting on a podcast and writing a book. But I don't also want to mitigate that for somebody that, you know, is just working in their local parish, or, you know, it doesn't have to be like you're on thousands of different, you know, websites. It's just, how can I help others, because I have this gift, I have this knowledge, and now I want to share it with others and help other people. And I think that's the beauty of community, and really of how we got connected. And then
Yeah, right.
also, you know, yeah, how, you know, you're creating this investing community to really help others see investing in a different way. I mean, I've certainly never heard of these types of funds. So it's exciting to hear and learn more about.
Yeah, and like we said, you know, if there are more people, be it in a community or not, that would just share that in that at that level, it would be a nicer place to live in, wouldn't it?
It would, I think. And it's really one conversation at a time, right?
Oh,
So
yeah, it
one
is.
connection at a time that opens up doors and opens up worlds. So I really appreciate your time today. I'm so glad that we had this opportunity. And if somebody wants to learn more about you, so we've got the book here. I'm going to put it up here. It's Retirement Money Secrets. So for anybody watching it on video, A Financial Insider's Guide to Income Independence. We'll link it in the show notes, of course. And then you talked about the community. Are there any other ways that somebody can reach you or connect with you? Or
I have a website as well. It's called theincomecoach.net.
Got it. Okay, we'll make
So,
sure to include that as well. So all that will be included in the show
yeah.
notes.
Well, thanks.
And Yeah, I look forward to staying connected, learning more from you, and just really appreciate your time today. So thank you so much for being with us and our listeners.
My pleasure.
Loved being here with you today and would love to connect with you more over on Instagram. My handle is linked to the show notes, or you can just type in @Chaffin Donofrio. And I have something special for you as a free gift, my Dynamic Life Journal. This special book has the power to really help you live a soul-inspired life. Go to freegiftfromkara.com. Easy to remember, freegiftfromkara.com. Until next time, beautiful people, sending all my love.